All right, guys, we have to go over buying the dip in this video and talk a little bit more in depth about why this might not be the best mentality to have in a bear market and in the stock market in general. And this is going to be more of a long-term investing video, not really a short-term trading video, so keep that in mind. Everything I'm saying here when it comes to buying the dip, this pertains to long-term investing, 5, 10, 15, 20 plus years out. So keep that in mind. And with that being said, I guess let's just dive right into the video. So at this point in time, we're in a bear market, right? The S&P 500, the NASDAQ, the Dow, Russell, all of these are down a lot. We can see here on the yearly chart, the S&P's down from 479, almost 478, and it hit 362 as of now. That's a drop of about 24%. We have Triple Q, which tracks the NASDAQ 100. This went from 408 back in November of 21, and it just hit 269 recently. That's a drop of 35%. The Russell went down about, let's see here, from 2450 to 1640, 34%. You guys get the point, right? And during the bear market, everybody, and myself included, although the videos I talk about buying the dip, those are for trades, right? That's, those are, points that I make in those videos pertain to trading. In this video, again, we're talking about long-term investing, right? So during the bear markets, we get the dips, right? And just because we're dipping, a lot of people are buying, individual stocks that might be overvalued, or ETFs, of whatever it may be, I don't know, but people are just buying blindly just because there's a dip, because everybody's kind of conditioned to buy the dip, and they kind of hoard. I don't know if they hoard their money, but during a bear market, people are definitely more cautious, which rightfully so, that makes sense, but they try and time the market. That's the problem. They hoard this money and they try and time the market, or rather time the bottom, and a lot of these people end up missing the bottom. And I was reading this very interesting article. We don't have enough time to go fully in depth in on it here. I think it was on Of Dollars and Data. I want to give credit to where credit is due. I think Nick Majuli wrote it, I believe. Go read that article. It's Buying the Dip, it's called. And that's kind of what sparked what's it called? It sparked the idea for this video. And in that article, he pretty much broke down the markets between, I think, 1970 to 2020, and he went over a buy the dip strategy from 1970 to 2020, and he went over a dollar cost averaging strategy where people were just buying no matter what. They weren't hoarding cash or waiting to time the bottom. And the dollar cost average strategy, where people were just buying, I think it was bi-weekly, no matter where the markets were at, that ended up beating the buy the dip strategy. Again, that article pretty much sparked the the topic for this video. So go check it out. I might as well link that article down below. It's good. You guys got to go give it a read. It goes more in depth. So yeah, at this point, people are trying to time the bottom, and the truth is, guys, with ETFs, it's not the best idea. I personally I've been buying VOO, VXUS recently, every freaking week, no matter what. I've been dollar cost averaging. VOO is the S&P 500 ETF. VXUS is the total international stock market ETF. These are two that I've really been buying no matter what, pretty much every week, a couple times a week, but I've been dollar cost averaging throughout the entire bear market. Now, with individual stocks, it's a little bit different, and this is kind of where we got to break down some examples from 2020 and 2021. We saw a lot of bubbles in that market, and if you took this, or during that time period rather, and if you took this buy the dip approach with a lot of stocks back then, and you saw them dip 10, 20%, and you're like, oh, this is good, it's the dip, buy the dip, right? You got smoked on a lot of those stocks. So with stocks, you have to look at a lot more than just how much it went down, and it's down a little bit, so that means it's time to buy the dip, right? You have to look at a lot more. You have to go into a lot more depth. Snapchat's one. Look at this. I mean, this is a company that, let's pull the 3-year chart. It was $83. It went down a little bit, 60 bucks, 65 bucks. You know, if you bought that dip, you would have got destroyed, right? Zoom, ZM. I mean, the proof's in the pudding, guys. This thing went up crazily, and then it ended up pulling back. If you bought that dip, you would have got killed. So you have to kind of really, well, this is the whole point of individual stock investing. You have to really pay attention to valuations. You know, just because a stock runs up crazily, like in this example with Zoom, it went to 600, and it pulls down 30%. 40%, it doesn't mean that it's undervalued because it went down 30%, because you have to realize how overvalued it was when it went to 600. And for it to get undervalued, it's got to come down 80-90%, like what we're seeing literally is happening, right? We went from 60 bucks to 600. It came down to 350. People probably got trapped in there at 350 thinking, oh, it's by the dip, right? It's down 40%. Well, now look at Zoom, guys. It is down 85%. So I can't say it enough. Valuation is very important. And just because a stock dipped, it doesn't necessarily mean it's cheap or undervalued. You really have to pay attention to that. And you have to dig deeper into these stocks, whether it's Zoom or Snapchat, or stocks that I'm looking to buy during this bear market. Adobe, Ford is another one. What's the other one I was looking to buy? I mentioned this recently. Oh, Nvidia, right? These are stocks that I'm looking at, and I'm really trying to figure out the intrinsic value. I have an idea, of what the intrinsic value of the business is, and I'm trying to figure out what I'm willing to pay. And I've mentioned, my price targets, what I'm willing to pay for these businesses. I've talked about this on my channel. So there's a lot to investing in individual stocks. And again, with ETFs like the S&P 500, you just got to buy every week or 2 weeks long term, and you're going to be fine. But with individual stocks, the point of buying individual stocks is to try and buy them for 50 cents on the dollar, 75 cents on the dollar, and this is going to help you outperform the S&P 500. So if you have individual stocks that outperform in your portfolio, and you have ETFs like the S&P 500, which is kind of like the base, then you're going to overall outperform, especially if you're selling calls or selling puts and, creating income from dividends and things like that. And I'm not trying to make it sound extremely easy, because it's not. It's very freaking hard. Very hard. In fact, 80-85% of actively managed mutual funds, they lose money, right, guys? So this stuff's not easy, but that's how it goes. I mean, I'm just telling you how it goes. You have to find individual stocks that are trading cheap and buy them with a margin of safety. That's your only really chance here and assuming you pick good businesses, that's your only chance to really outperform the market. So let's see how much we're in here, how long we're in here. 8 minutes. All right. So that's pretty much it. I mean, I don't want to go too long. I got all the points across in this video. And again, this is for long-term investing, not trading. You guys got to realize, just because a stock is going down a little bit, it's dipping, doesn't mean it's necessarily a good time to buy it for an individual stock. But again, with the S&P 500, the overall ETFs, buy whenever, based on that study and, that chart, the chart comparison from that article that we mentioned, it's for ETFs, index funds. It's best to just buy every week, 2 weeks, and, you're going to do well long term. The markets, have performed 10% a year on average. So, yeah, I mean, that's pretty much it for this video, guys. I just wanted to, put my little 2 cents on that. If you enjoyed it, hit the like button, subscribe, drop me a comment. Feel free to join my Patreon. That's linked down below if you want. It's the first of the month. Check it out if you want. You get all my buy, sells, call-outs, morning videos, more access to me throughout the day. That is linked down below. And you could also get 10 stocks from Moomoo and 6 stocks from Webull. Guess what? Those are also linked down below. And with that being said, I'll catch you in the next video, guys. Peace out.